The prevailing consensus to Trump's latest tariff hikes from liberals and social democrats has been one of exasperation, accusing him of being economically illiterate and setting out to purposefully damage the US economy. But unfortunately, that is what US capitalism needs at this point in time. Goldman Sachs produced a graphic in 2020 that showed that 50% of US companies were unprofitable. That makes them useless in a capitalist economy. So they need to be destroyed and then reabsorbed. This is the problem with capitalism. The rate of profit tends to fall as innovation makes labor, which is the value producing part of the production process, makes labor a smaller part of the production process, and therefore the rate of profits, the rate of exchange value production tends to fall, and you end up with surplus capital like what we've seen in the last 40 years in Detroit, for example, in the US, where actual productive capital, physical capital, becomes unprofitable and is abandoned. It's surplus capital. It can't be used profitably. It can't be invested in profitably. And so it's, destroyed and absorbed cheaply by bigger companies, or companies merge to achieve economies of scale and become more productive so that they can produce more commodities in less time. That's how you overcome a crisis. But you need to do it through the process of devaluation, which includes the destruction of capital itself. And Trump and his administration, they know, like all of their predecessors, that capital needs to centralize into fewer hands in order for capital accumulation to continue. He is just doing really what has been going on in the past 40, 50 years at a more intensified notch, because the demands of capital accumulation, the needs of capital accumulation tend to rise. It tends to get more difficult to accumulate capital, a bit like a bodybuilder's, early gains are quick. They then have to start working harder for longer to achieve smaller gains. It's just diminishing returns. That's how capitalism tends to work. And there's a number of reasons why why Trump's tariffs make a lot of sense. For starters, the number of US companies, both in the banking and non-financial sectors, have halved in around the last 30 years, despite all of the privatization, all of the wage cut, all of the real term wage cuts, all of the deregulation. You'd think the opposite would have happened, but in fact, that has been the outcome, because capital accumulation gets harder and harder and results in a rising surplus of capital that can't be reinvested. So at some point, someone is going to do something different, and tariffs are one of the options. It's a manifestation of running out of other options. So it's not really just about protectionism with these tariffs, although that is part of the motivation. Obviously, he might want to, or he might sound like he wants to prioritize the protection of US capital, but tariffs are usually more effective for younger, developing industrial bases, whereas obviously the US is old and senile, and in fact has been, largely outsourced, or where it hasn't been outsourced, it's been largely automated, resulting in the decline of manufacturing jobs in the US. And when we say outsourcing, we're talking about US capitalists investing overseas, where production is of a lower level of development, and therefore there's more room for innovation and development. Obviously, part of this gambit is to get, and he's been very explicit about this, he said, if you want to avoid tariffs, you need to move to America. and that will enable the US state to tax those companies in the US and raise revenue in the US. That's probably going to be difficult because it's going to take a long time and you don't want to be losing money for that long while you're setting up. I think that could, if companies do opt to do that, that really could incentivize an accelerated level of development in something like 3D printing to simplify the physical and logistical challenges of moving. But also, tariffs are just a consumer tax on US companies and US consumers, and that will raise revenue for the US state, which is a capitalist state, which the capitalist state can then use to boost its subsidization of the remaining capitalist companies, private corporations, private enterprises that survive the latest round of capitalist crisis. He's also just trying to get economic growth going again because of all the surplus capital that can't be invested. Growth in the US has been stagnating for a long time. Debt to GDP has been rising. It's higher now than it was at the end of World War II. So there's more debt in the US economy than there is in terms of profitable, productive activity. And obviously GDP in itself is problematic. There's all sorts of unproductive stuff included in that figure. So to get growth going, one of the things he needs to do is lower interest rates to incentivize borrowing that can then be invested. Obviously, if it's too expensive to borrow, if the interest rates on borrowing are high, that's disincentivizing borrowing and investing. So to get that down, especially in terms of the 10-year yield, which is the one that, is a standard bearer of, auto loans, productive investments, mortgages. He needs to bring that down. And the tariff announcements on the 3rd of April, on the 4th, we've seen that the 10-year rate decline already. Oil prices have come down as well, which obviously boosts business activity because they're spending less on their energy costs. The pain and uncertainty that is being created by these tariff hikes is pushing investors into investing in long-term government debt, which will force down rates on the market as well. And that's going to have a longer-term effect of bringing down the cost of investment, borrowing and investment, and also lowering interest rates on government debt, which is getting very, very expensive. And because the US debt is getting so high, as most people who are paying attention to the economic situation know, the cost of servicing the debt, of paying off old debt with new debt, is getting exorbitantly high, which is why the debt to GDP has got so high. The other thing is that these tariffs are just leverage on the countries they're being imposed on. We've seen Trump backtrack from tariffs twice already, and he will probably lower them again to some extent. What I think he's going to do is use them as leverage to impose fees on nations who want to continue to use the dollar in international trade and to use US naval routes, protected naval routes. He'll basically offer a fee that will cost them less than the tariffs do. So that's part of the plan as well. And of course, this is just another example of, like tariffs will contribute to bleeding the public dry in order to redistribute value upwards, in order to aid capital accumulation, to redistribute value from smaller and medium-sized companies upwards to the monopolies. For the same reason, it's not just a case of capital needs to bleed the public dry; it needs to bleed the rest of capitalism dry. It needs to bleed everything dry to give itself a chance of bouncing back from the crisis it's in. He does also obviously want to devalue the US dollar, but not to an extent that he loses the US dollar as the reserve currency. He's been very explicit about saying that he doesn't want to lose the US as the world's predominant reserve currency. Obviously, he doesn't want the US dollar to be so expensive because that's making it expensive to produce in the US, and it's making US exports expensive. So he does want to bring that down, but he doesn't want to do it to the extent that the US dollar loses its predominant status as the world reserve currency. He's trying to have his cake and eat it, but there's a lot of contradictions that capitalism is sinking into. Trump is not going to reindustrialize the US in the way that he's selling it, certainly, because firstly, it's going to be difficult to decouple from China, which is just so dominant in manufacturing now. Secondly, jobs in manufacturing are largely automated. Workers are supervisors of automation, but you don't require as many as you used to when workers were operating mechanized machinery. Any companies that move to the US are going to find it difficult. It's going to be very expensive to do that. So these are all the complications, and certainly it's a big gamble, but really, 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 this is a manifestation of the increasingly demanding needs of capital accumulation, which, as I say, is getting more and more difficult for this system to achieve. So if you want to call Trump stupid, then really you have to do it on the basis that he's not nationalizing the economy, because that would remove the barrier of surplus capital, because you would then have production that isn't dependent on making a profit. It would remove that barrier.